Welcome back, technical traders. This is the Humble Chartist, and today I'll be doing a technical breakdown on Shopify. Ticker symbol SHOP. Before we begin, please take a second to give the video a like and subscribe for more charting and price manipulations. In return, I'll tell you guys a joke regarding shopping. I went to the shop the other day to buy 6 cans of Sprite. It was only when I got home that I realized I had picked 7 up. Okay, anyways, jokes aside, I deeply appreciate those who have liked and subscribed to my videos and channel. I'll first start off by analyzing the daily charts, followed by the weekly charts and monthly if necessary. So Shopify recently took a big hit and a big drop. So let's try to understand this particular counter better. Okay, so personally, right, what I feel is that stocks when they had a strong uptrend, right, usually will also have a strong downtrends for companies that are not really doing fundamentally well. So the big players may have already left. In fact, they already distributed. So when there's an uptrend, there will usually be a downtrend thereafter. So you can see that during this particular period here, this is a form of accumulation where the big boys, right, need to big boys or the big players or the market makers, they have to accumulate as much as possible. So when they do the uptrend, right, they are able to profit from the uptrend. So you see during the uptrend, there are pullbacks. These are considered healthy pullbacks. And yet at the same time, retail investors, they'll come in to panic, profit take, and then they sell and it goes higher. So you can see that this was the last pullback, and then that was the end of the uptrend. So let's get a deeper understanding as to how these big players actually distributed. So one way of distribution is actually to create new highs. What does creating new highs means? Okay, so you can see that these are lows. So these are higher lows, and also these are higher highs. So this is the uptrend, higher highs and higher lows. So you can see that this is also a form of a higher low. But fake breakout means that they want to lure retail investors in to trap them. At the same time, they will exit their positions and clear off their positions as well. So what does a fake breakout mean? Okay, let's take a look here. So this level here, you can see that there was a fake breakout here. So retail investors or those breakout traders, they'll tend to take this breakout and thinking that Shopify is going higher to create higher highs and what. But there's always the best time to sell into strength, because that's when you know that the stock is actually the weakest and it will tend to have a very big correction. So if you were to zoom in further, you can see that at this particular time, there was also a last chance to, in a sense, last chance to get out or last chance to profit take. But of course, it's hindsight, so nobody will know. But if you will see this looking back, you can see that this is a very bearish looking candle, even though we cleared this particular high. When the shadow of the candle, right, is very high at the top, it means that sellers are actually present and they are in fact trying to push and clear their positions. So they push up the prices in the morning and then they push down the prices later in the day, which is actually a very bearish indicator. And hence we did see a very huge red candle at the very next day. So a fake breakout is always very tricky to play because you never know whether it's a genuine one or a fake one. So let's give you an example. Currently, I have 58 subscribers. So we know that the resistance is 60, right? So for instance, I may go to 61 and then fall back to 59. This is called a fake breakout, where you clear a certain psychological resistance such as 60 and then I fall back to 59. So what are you guys waiting for? Please help me to hit the subscribe button and help me clear this resistance of 60 with good volume. Okay, anyways, moving on. So when a stock has an uptrend, it would tend to also have a downtrend. And when a downtrend happens, right, many retail investors will actually come in and then they think that, oh, the stock will go higher. But that's actually one of the most very dangerous move you can actually do. When the stock is on a downtrend, first thing is you never buy in. And second thing is to never average your losses, because a downtrend can always go lower, and never try to anticipate bottoms, because we will never ever be able to catch them. And When on a downtrend, we only can expect rebounds. Unless there's a very long period of accumulation, then we can expect a reversal of a trend from a downtrend to an uptrend. You can clearly see that the accumulation here took a few years, in a few months and years, in fact. So it is impossible for the big players to accumulate within weeks. Okay, so where are my potential supports and potential supports upcoming? Personally, when the stock has really dropped so much, it's a very dangerous, and we never know when are the big players coming back. But if you look at the previous data from 2020, then we can see that there is a resistance here at this level here. You can see this red candle here, and then there's also a support here. So the previous resistance, right, may turn into support. But once again, I only expect a strong rebound or just a rebound, but I do not expect a reversal because we are downtrending. You can see that on an uptrend, we have pullbacks and small corrections, but then the trend still remains. Likewise, on a downtrend, we can expect rebounds, but it's very difficult for the trend to reverse. Okay, so my first particular support will be just slightly under 600, maybe 580 to 590. I do believe that many people, or perhaps some retail investors, may tend to cut their losses at this position. So once they cut their losses, then the big players try to flip it up just for a quick trade, or what they call it, hit and run. And then if that one were to break down, then I personally may only consider coming in at about $300 level, where there's a very strong support here. You can see that buyers are coming in at this $300 support. So this will be a stronger support. And that's still quite far away because it's about $300 away. That's really quite bearish, but I do not really expect much from this particular stock considering the fact that it has such a huge sell down. If you look at MACD, the MACD tells us a lot. You can see that on the MACD, once the blue line has cut below the orange line, it's an indication to get out. So if you were to sell here, somewhere here, it's about 1,000, lowest will be 1,300, 1,400, and then you can sell, clear your positions. And you can see that this is a trap here, where the blue line cuts above the orange line, but was not sustainable. So we had like just a short-term rebound, and recently we also had a blue line cutting back above the orange line, where there's this rebound here, but it's only a short-term rebound, and then we continue to trend lower. So if you look at the daily MACD, it's too confusing for you. You can consider looking at the weekly MACD. The weekly MACD tells us portrays quite a sad story to investors. You can see that we have not even turned at all. Yes, there was a white histogram here, but the blue line has yet to cut above the orange line, and it doesn't seem to be turning so soon. So long as this blue line does not cut above this orange line, then it's not really a wise choice to enter because big players are likely to be pushed it down further. So you can see that this is a form of distribution where the big boys actually distribute to the retail investors, and there are many chances to get out. Where here the blue line cut below the orange line, and then once again it cut one more time at about these levels. So if you took profit about 1,200, 1,300, that wouldn't be that too bad again as compared to holding it all the way to current levels. And if you look at the monthly MACD, it's looking very bad. You can see that once the blue line has never cut below the orange line before, and once it cut, it'll be a wise time to actually take profits or clear your positions, because once the big players have left the game, they wouldn't come back so soon. Yeah. So that's all I have for this Shopify. Let's do a recap. Shopify has been downtrending quite a lot, and you can see that there's heavy volume sell down at current levels. Personally, I would say that the previous resistance at about 580, 590 may turn support, but I only expect a short-term rebound and not really a long-term reversal. If you were to head back to $300 levels and we see potential accumulations at this particular price, then the big players may be an indication that the big players are coming back. That's where you can consider buying in or averaging down for those who are stuck at higher prices. So if there's anything else, I will give you guys an update. Thank you for stopping by, and do check out the rest of the channel. Leave in the comment section below your thoughts on this particular stock, or if you have any other stock TA requests. Also, do share this with your friends who are interested in market manipulation. Lastly, I do appreciate any feedback to improve my video content for you guys. Till we meet again, appreciate the manipulation.